time to talk property thanks to our partners GJ Gardner. OneRoof and its data partner Velocity have been looking into house price changes over the last 10 years. They found the average house price in New Zealand has grown by almost $400,000 in that period. Growth in Queenstown has been huge, cracking a $2 million average house price, up from a little under $900,000 in 2015. And you can see the post-COVID slump there, particularly hitting Auckland and Wellington hard. Auckland's 10-year growth figure at 38% is the lowest in the country. They've been outpaced by lower value regions like Gisborne and Southland, which saw more than 130% growth. Helen O'Sullivan is the CEO of Real Estate at Velocity and joins us now. Helen, good morning.
Good morning, Ryan.
Great deep dive on the numbers. Fascinating insights, isn't it?
There's nothing that's quite as much fun as diving into the detail.
What surprised you or didn't surprise you about these results?
Well, I think the most striking thing about those results was really that arc of Queenstown, and pretty much all of the other main centres follow much the same trajectory. They climb and then there's a huge peak sort of post-COVID, then they come back down again. Queenstown comes down a little bit and then just powers on away from the rest of the country.
Just keeps going.
It is its own little microclimate.
It is, isn't it?
In so many ways.
Yeah. Auckland has the lowest percentage in the country. Why? I mean, we always think traditionally Auckland leads and the regions follow, but we're sort of seeing the inverse of that at the moment.
Yeah, I think when you look at this in the percentage terms, that is where it does show the biggest difference. But I think there are some things within the Auckland prices which are kind of masked by the averaging figures that we're using. Within Auckland, you've got to remember over this period, the Auckland Unitary House Plan came into effect. So we start to see a real change in the mix in housing in Auckland. From about the plan came into effect in 2016, took developers a couple of years to get their heads into it and then powered away. This is actually a really good news story in the sense that the Auckland house prices are becoming less unaffordable, I think is probably the term we'd like to use. Largely, or in large part, due to those changes in mix. And that lesson in how we do density well and start to urbanise in a more dense fashion is a really useful lesson, I think, for the rest of our housing markets as they follow the similar trajectories to Auckland's in terms of, you know, a small population squeezed into a geographically intense sort of a place. You know, the infrastructure costs are what really start to drive house prices. You know, and you see it in Queenstown in particular. You know, it's a really constrained region. The infrastructure costs a lot of money to do, even a little bit. And that obviously translates into house prices.
Pushes everything up. And there's good demand obviously there too, right?
It is a very popular part of the world, and every time I go there and fall into neutral gazing at those mountains, I get it.
Yeah, I get it too. Kawerau, what is going on with Kawerau? So 2015's cheapest town for property, Kawerau, saw its average property value more than treble, jumping 256% from 118 grand to 421,000. Hugely significant. Do we know what the key drivers are there?
Look, I think the key drivers there are in part the fact it's a really small market, and so small changes have a big impact. There won't be a lot of transactions in that area, and so if you start to see again the mix move, then you will see significant lifts. I think it has also been a target, given the really low entry prices. There have been some investor movements into that part of the world as well. Because
this is the thing, the lower or the cheaper the market, then the higher the percentage increase will be, right? Because it's more affordable comparatively.
And that is what you see when you look across all of the regions in terms of the territorial authorities. The dollar gain can be relatively similar, but if you start at 1.5 and get to 1.9, or you start at 400 and get to 900, you know, the return is significantly different.
Helen, you're going to tell us about the Hurunui Hotel as well, I understand.
I am.
Please. We've got some footage we're going to show people too.
Yeah, so it's definitely Historic Hotels Month on OneRoof, it seems. We've had the Gardner Hotel with enormous amounts of interest across, international interest. And the Hurunui Hotel has actually changed up their offer. So this is actually now available for an operator to take over as a lease, because the owner is really keen to get it reopened and get it thriving. You know, there's a real opportunity. It's a real tourism business. You know, it has a campground, it has a whole bunch of facilities, you know, so there's a real opportunity there, not just to have it as a pub, but to have it, with powered campsites and music and sort of driving a real thriving, but making it a real destination.
Yeah, cool. Do we know what's happening with Cardrona? Is it sold yet? Last I checked,
the timing on it's very close.
very close, but not quite. No cigar at this point.
We're all waiting.
Yeah, it's a slice of New Zealand. Isn't
It really is.
Cardrona Hotel.
Yep,
I was thinking
100%.
about it yesterday. Would I move there and do that? I was having one of those days. Appreciate you coming on the show, Helen. Thank
Pleasure.
you.
Thanks for having me, Ryan.
Helen O'Sullivan, CEO of Real Estate at Velocity. We talk property every week thanks to our partners, GJ Gardner. Don't worry, I'm not going to move to Cardrona.